Well, let's get to our first topic for the day now. Latest data released by the National Bureau of Statistics shows that capital importation into the country declined by 28.09% in the first quarter of 2022. The data also shows that the total capital imported into the country in the first quarter stood at about $1.57 billion, down from $2.19 billion in the preceding quarter, as only 6 states, including Lagos, Anambra, Oyo, Katsina, Plateau, and the FCT, received capital investments in the period under review. Now, the highest sectors that received capital investments are also the banking, which recorded $818.84 million, production recording $2 to $3.67 million, and financing sector of $199.37 million US dollars. Well, joining me to break these figures further down and understand what it means for Nigeria, I'm being joined by the Director, Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Mr. Ibrahim, thank you so much for your time. It's good to have you start the week with us on Business Nigeria.
Thank you too very much for having me on.
Yes, the figure is down 28% in Q1 2022. Before we go to the states that attracted investments, what is responsible for this decline at a time when many say that it seems like businesses are picking up and we are getting back gradually to pre-COVID times?
Thank you very much. I think it is true that businesses are picking up, but when we take a look at the global economy, investors globally consider the risk to their investment. We are talking about capital importation in this case, and it is a reflection of inflows of capital, by investors in form of equity investment or debt investments. In those forms. So they will consider the risk of such countries where they are investing in. And I think Nigeria in this case, is on the high side when we take a look at our risk profile as we speak. I believe that they have considered things like, number one, security risk, and they are also considering economic risk. And importantly, as we speak, this period, our political risk is on the high side. So it is possible that, those are the key factors that are responsible for the contraction that we saw on a quarter-on-quarter basis, which was 28% decline. And even on a year-on-year basis, it was down by 17%. And let me also say that the $1.5 billion is not what we should be recording on a quarterly basis as a big country that we have, or let me say the largest country in Africa.
Interesting stuff there. Lagos, as usual, standing tall. $1.12 billion is what has come in, followed by FCT. Now, only 6 states attracted investment. What is happening with all of the resources that we have across the country? What is happening to these states that are not attracting investments?
So just like I said earlier, I think it is a reflection of the risk appetite of foreign investors into Nigeria. You will agree with me that those states where we witnessed inflows in form of investment, those states are relatively safe states. In terms of security, you will probably see security being a major consideration by investors in that regard. So I think that is one major thing that is driving the direction of investment into the state. And I think there is another element for consideration, which is the commercial status of each of the states. And Lagos is a major state in that regard. In fact, it is the commercial center of the country. So it is not surprising that we saw huge investment inflows or capital inflow into Lagos compared to the other states. I think these are the factors responsible for the direction of flows.
I'm also thinking around policy. I think that we should have more policies, yes, as we try to address security, but I also think that there should be policies that will be friendly to investors and investment. Because you see people looking at countries around us, sometimes Ghana and the likes. People want to do businesses around all of these countries because they see transparency, clarity in some of the policies of government. Are you thinking along that line, or what's your reaction to that?
Absolutely, I agree with you. But I think, I mentioned security, first, and then the commercial status of each of these states next, because those two will be on the front burner in terms of, factors for consideration. Policies are very important, and those policies, should not just be in place. They should be steady. They should be predictable, and they should also be friendly to foreign investment into Nigeria. So it is not the best when we have the huge population, when we have the huge opportunities, and we are losing them to countries that have far less population than we do, and countries that also have less natural resources in terms of what investors can invest in. So I absolutely agree that we need to fix any issues that we might have around policy, around implementation of those policies, as well as ensuring that they are friendly to foreign investors and will steadily attract them over the medium to long term.
Great stuff there. We also see that foreign portfolio investments is taking about 60.87% of what is coming into the country, about 957.58 million US dollars. And on the other side, FDI is just about 9.85%. That's what it accounts for in all of this. We still have this issue of FDIs, FPIs.
Yes, absolutely. We have that issue, and I think we will continue to have that challenge where our country is able to attract largely speaking foreign portfolio investment, which we consider as hot money. They come in hot and they leave very easily. I think for us to attract FDIs, foreign direct investment, we need to fix our structural problems in this country. And one key element around that area is infrastructure. We should be able to have good or better road network, very good transportation system. We should also be able to have very good power system where investors that are operating in the country will be operating at relatively cheap or low cost. So those are very key considerations for many investors. And I remember that a lot of countries companies that were previously in Nigeria relocated to neighboring countries like Ghana, just because they found the needed infrastructure there for their businesses to succeed. So we need to fix infrastructure if we want to attract more FDIs, and that will be in addition to ensuring that we have the right policies. And possibly we should also give incentives to attract such FDIs. If we do not put all this in place, we probably will be in a case where we are only seeing foreign portfolio investment instead of foreign direct investment. One key element for consideration is that FDIs will always provide job opportunities for Nigeria. And this is a very compelling reason the government should look in that direction and ensure we fix on any problems around it to attract more FDIs into the country.
I would like to follow up a little bit with regards to PEBEC initiative, which is supposed to ease of doing business, make the environment more enabling. Of course, that's what it's set out to achieve. But I want to ask the question this way. Do you think that even the agencies of government that to contribute to the success of this initiative, do you think they are working in tandem, at par with the goal or initiative of the entire scheme. Some will say, or some business people that we speak to will say that a lot of issues come with multiple taxation, with companies or government agencies coming from all angles to get taxes and levies. So do you think they are in support of actualizing this goal of enabling business environment in Nigeria?
Well, I think they are in support, but I think they probably, are approaching it probably in the wrong way. And in such a case, you cannot achieve success unless you work with, the corporate environment themselves and ensure that you listen to them in terms of, what they see as the challenges to their problem, to their businesses. Double taxation or multiple taxation is a major sort of impediment, to attract investment into Nigeria. So we need to fix that kind of an issue, in my view. And the agency cannot do it alone. They need to listen, and the government also have to allow, the corporate organizations in this case, to also make meaningful contribution and listen to their suggestions to implement all those plans and policies. That is when they'll be recording progresses. If they want to go by their own strategy alone and probably just follow the government's instructions, we most likely are not going to achieve the results that the government or the country is looking for, either in the short term or in the long term.
Brilliant stuff there, Mr. Tajudeen. Now, let's look at the higher sectors now that recorded this capital input investment. We'll start with banking, which is doing pretty well with what we've seen, financing sector, production, and on the other side, that's for low investment, consultancy, IT services, and construction. What do you make of this breakdown?
Well, I think for the banking sector, that is not surprising because one major element of capital importation is loans. That foreign investors have brought into this country, and if you trace it, you will see that there are some banks that feature in that table, which is a reflection of what they are doing with other banks overseas. And largely speaking, these are in form of loans to those banks to support their ability to supply foreign currency to their customers. So you will see such credit inflows being part of what is influencing the capital importation in the banking sector. And in the other sector, there are some opportunities that some investors have seen in there. Those are also underpinning the inflows that we saw. But for the banking sector, loans from advanced economies is a major constituent in my view.
Well, let's see how it plays out. Even for the countries, we see United Kingdom accounting for the highest, followed by South Africa and United States. Moving on, what do you think will play out with our expectation with capital investments as we move on in 2022? Of course, ahead of the election year.
So as we move on into the coming quarters, I think foreign investors will still bear in mind the risks elements that I talked about earlier. The first is around security risk. The second is economic risk, and the third risk factor, I believe, in my view, is political risk. So we most likely are not going to see much in terms of increases in the numbers. Maybe the numbers will remain around $1 to $2 billion per quarter until when we have, our election and then we have a new administration. By then, there will be a new appraiser, for Nigeria by foreign investors to gauge how much they should be pumping into this economy in terms of investment. So that is what I expect, before the general election in 2023.
Let's touch on the manufacturing space before we wrap up this interview. So at least let's see what's happening. The capacity utilization hits 59%. That's increasing by 6.6 points. Now, would you say that the sector is fast going back to the pre-COVID time? Talking about the manufacturing sector in its entirety, all activities return to normal in that space.
Absolutely. Activities are beginning to go back to normalcy in the manufacturing sector, judging by what we are seeing in the cement space and also in the food and beverages, as indicated in the volume growth by the companies that operate in those sectors of the Nigerian economy. So it is a positive one, and some of them had to increase their capacity just so that they can accommodate the increase they are seeing on consumption of their goods and services. So it is a positive one, and the outlook, in my view, is positive.
The challenges remain very key. And two, I'd like us to wrap up with the forex scarcity and the big one, backward integration, so that we can reduce importation too of raw materials and all of that. What's your take with regards to that? And how well do you think our manufacturers are they trying to keep up with this development?
I think on Forex, every manufacturer as we speak already understands what the current situation or challenges are. And they are, currently sort of doing their businesses, in line with the dictates of the market. So what I expect is, for them to continue to invest in backward integration, invest in local production, and that will over time ensure that their dependence on imported raw material reduces significantly, and then it will allow them to be less bothered of any dislocation in the FX market. So I am positive in that regard. We are seeing positive, sort of responses in the sugar industry, and the cement industry, bearing in mind, does not import anymore. It is because they build local capacity. So we will probably see other sectors such as sugar and some other ones also building capacity to ensure they can produce locally what they need as raw materials. We need time. That will probably materialize in the long term, in my view.
Nice having you join us on the show. I've been speaking to Director Research and Strategy at Chapel Hill, Denham. That's Mr. Tajuddin Ibrahim. Do enjoy the rest of your day.
Thank you.